You are listening to Retire Texas Style, the podcast. We appreciate you joining us. Talk about just trying to stay on top of your financial planning in general, and you're trying to keep up with the news and everything happening. It's literally a full-time job to keep up with all the changes that politicians are making to retirement planning. And the Biden administration, they are trying to come out with some crazy proposal right now to change the tax status of the 401k. Basically, Biden wants to do a flat 26% tax credit across the board, no matter what tax bracket you're in. This would help, of course, those in a lower tax bracket, but it would hurt those in a higher tax bracket. So, Steve, can you tell me what this means, and do you think this is going to discourage people from actually using a 401k?
I just think it's going to confuse people more is what I think is going to happen. You know, the difference is, Jess, that currently we have a tax deduction. We would turn that into a tax credit. So whereas the tax deduction reduces your taxable income, a tax credit directly reduces your tax liability via a dollar-for-dollar reduction on the taxes you owe. You know, I think, just to make it real simple, if you think about this, let's just say you're in the 37% tax bracket and you contribute $10,000 to your 401k plan. Then you're entitled to a $3,700 tax deduction currently. But for those, Jess, that are in the 10% tax bracket, they would only receive a tax deduction of $1,000 for the same $10,000 contribution. So I don't think it's a good thing. It just muddies the water more. But the Biden proposal would adjust that to $2,600 tax credit for any taxpayer making $10,000 contribution, regardless of their tax bracket. So it's going to help folks in the lower tax brackets, but people, in the middle tax brackets and high tax brackets, it's really going to be a deficit for them. It's going to be kind of a train wreck. And, Jess, I think it's so hard. I think the 401k has been a great thing because, you sign up to go to work, your employer is going to make a 2%, 3%, maybe even a 5% match. So you say, you know what? Great. I'm going to start saving. And then you get to where my age, now that I'm 60, and you look back and go, wow, that worked out good because I saved a lot of money. Just with this, I'm afraid people would not continue to contribute to the 401k.
I mean, certainly the match. I mean, that's kind of the whole thing is you contribute, we contribute, and we're going to help you grow. I think that's definitely the incentive. And, you talk about incentives. There's a lot of tax incentives happening right now with tax planning because talking about the Biden administration, they want to do this crazy kind of proposal with a 401k. Now we know that the tax Trump codes are coming to an end here in 2026, I believe. Tell me what we can expect moving forward through this Biden administration.
Biden and his team have proposed so many crazy things that haven't happened. They wanted to penalize people taking a mortgage loan who had high credit score by 15 basis points. I mean, they had all kinds of crazy things they've done, and none of it has really come to fruition. But I think what would happen out of this is people would say, well, then I'm just going to go ahead and Roth my money, which means you're going to pay all the taxes on it, which is a great thing, Jess, because down the road, you could have tax-free income by doing a Roth or a Roth conversion. So I think it really makes sense. But I think the bottom line is people need to save. People need to be diligent savers. I think that's so huge for the future. And Jess, by muddying the waters and telling people 401k is not a good thing, where else are they going to save? Some people are not going to save at all, Jess.
Exactly. And, continuing the conversation here about just the political world, I mean, we are headed into a heated election season, which means, a lot of folks anticipating what's going to happen with the market. And we have been seeing that even as early as now. I mean, billionaires, Warren Buffett, he is starting to dump stocks left and right, which means, is this kind of a teaser of what's to come?
Well, I think it's crazy. I mean, if you think about what's going on, Warren Buffett, I think by most people kind of think of him as the gold standard. He lives his life very basic in the same house where he's lived for years, but he really has his finger on the economy. And when Buffett's company dumped $13.3 billion worth of stocks in the first quarter, I think investors were concerned that the slowing U.S. economy was eventually heading to a recession. Just as we talk about Buffett, he's kind of considered one of the greatest investors of all times and something of an oracle when it comes to financial markets. His moves and decisions are closely observed and analyzed. Well, now, all of a sudden, Buffett in the last couple of months has dumped another $8 billion worth of stocks, and he's moved to treasuries. And I think that that's something to watch. You know, when you think about that, how does that affect me? I think the normal investor ought to say, if this market is too risky for Buffett, is it not too risky for myself? You know, Jess, it's just interesting if you think about it. You know, Jess, do you know who Robert Kiyosaki is?
Yeah, I've heard his name. Isn't he the author of Rich Dad, Poor Dad, right?
Yeah, Rich Dad, Poor Dad, absolutely. I was doing some reading about Buffett last night, and you know, Robert had to say that Buffett is on the sidelines with $147 billion of his money in short-term treasuries. You know, entrepreneur Robert Kiyosaki said, I just watch these guys waiting for the market to crash, then go back in. And that's what he said Buffett is. And you're seeing all of these billionaires get out of the market right now. So I just want to ask you, if you're in the market as an individual investor with your retirement monies and you're within 5 years of retiring, you know, Jess, when the market fell in 2008, people worked another 5 years, another 7 years to recapture that money to make sure they could retire. So if you don't know how much of your money is at risk, if you're worried about not being able to retire when you need to call us at Hoyle Financial. We need to sit down and really show you what a retirement X-ray looks like for you and your family to make sure when you retire, you have all the money you need and you have all the monthly income that you need. If that's what you're looking for, I would encourage you to pick up that phone and call us today. Call us for a retirement X-ray analysis today, and let's sit down and really figure out the numbers for you.
You know, Steve, and speaking of our pal Kiyosaki here, again, the author of best-selling book, Rich Dad, Poor Dad, he thinks that inflation offers an opportunity. He recently told CNBC that he likes commodities in this economic environment.
So I just stay in things that as inflation goes up, gold goes up, real estate goes up, gasoline goes up, and food goes up. So I invest with the inflation, not against it.
So invest with, so ride that roller coaster with the inflation is what he's saying. What's your thoughts on this, Steve?
You know, Jess, I don't think we have any choice. I really don't. I think that inflation is here to stay. I hope it's not as crazy as it's been, but I just think it's politics. And I think politics are fueling that. And, you know, we broke retired people for years with a total flat, you know, interest rates. And now we have crazy interest rates. And, you know, people are coming to see me and saying, you know, Steve, how long do you think you'll have that 5.25%? And I'm like, I don't think that long. You know, a lot of people have just put their money in the bank and doing that. But Jess, they need to get it tied up, because back in 2008, when we had that huge correction, all of a sudden, all these great rates we had, these great bonuses, 9.5% roll-ups, all these great features that we're enjoying right now for our clients, they disappeared. Those were off the table. So I really think now is the time, you know, if you can get to your money, if you're 59 and a half and you can access your plan and do something with that money, you have options, and you need to figure out what those options are. But it all starts with just sitting down. So much about life is timing, and so much about money is correct timing. So I think when you are like me and you're, 59, 60 years old, or 65 or 67, full retirement age, it's time to really sit down, analyze the numbers, because just those numbers never lie.
Thanks so much for joining us for Retire Texas Style, the podcast. Get more details on the website, retiretexasstyle.com.
Hoyle Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency, and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. Bonus annuities may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that do not offer a premium bonus feature. Read your contract for restrictions, limitations, or penalties. By contacting us, you may be provided with information about insurance and annuity products offered through Hoyle Financial Group, Texas Insurance License 1719183.